Jesse Shrader is the CEO and co-founder of Amboss Technologies, where he builds infrastructure for Bitcoin's payment system. Over the past 5 years, he helped advance decentralized payments and liquidity, and Amboss operates the network's largest liquidity marketplace. So, Jesse, take me all the way back to your college days. I imagine you weren't thinking about on Bitcoin's Lightning Network, but I wonder what your ambitions were at that time.
Yeah. I was there to make the world a better place. I studied environmental engineering, and most of what I was working on was uh, wastewater treatment and pipe flows. Like, how does a sewer system operate? And lo and behold, it ended up bringing me into building, financial pipes for the financial system in a more honest system, which is built on Bitcoin.
Yeah, great answer. Which I find slightly ironic because I think Bitcoin's mining consumes more energy than certain countries like Argentina. So how do we reconcile those two facts?
It's pretty amazing. And when you dive into it, you realize that Bitcoin's mining is dominated by renewable sources. So Bitcoin mining is really supporting green energy. So all of the renewable pieces, a great company example is Gridless that is going into Africa, identifying stranded hydro resources and uh, paying for that energy, which is supporting a more reliable grid in rural Africa.
Yeah. And also, it is heavily optimized. A lot of the energy that gets used to mine Bitcoin is focused on areas where there's excess energy because the mining landscape is a very competitive one. So it's not just like wasteful to some capacity. It's used intelligently and efficiently, and the end product is something that's truly amazing. So I think it's energy well spent. And I want to dig a little more into the theory here because Bitcoin was the king. It's the OG currency. And yet there's still this vibrant and sometimes anxiety ridden ecosystem of different coins. And if Bitcoin was absolutely perfect, it'll be hard to understand where the use case for stuff like Ethereum and smart contracts. However, there's a very interesting narrative that not everyone talks about, and it's precisely what you do. Bitcoin is not just digital gold. It's not just this thing you put in cold storage. It's something that you can use to transact quickly. And I guess I would talk about the inception as why didn't this happen day one? And how has this problem been solved?
Yeah, I'd like to say that the next Bitcoin is Bitcoin because it is open source technology. It's constantly evolving. The Bitcoin that we use today is not the same Bitcoin that was drafted in Satoshi's white paper.
Yes.
It's changed tremendously. So just like Linux, started off as a hobby project, now is embedded in every computer, every cell phone, every car that we drive now. Open source technology is penetrating the world, and Bitcoin is a great example of that. It's constantly evolving.
Yeah. In some capacity, its marketing angle is that it's decentralized, but at the same time, it has to adjust to the times. This conversation segues nicely into a question about the inception of Bitcoin. Satoshi wrote in his papers himself that he wanted Bitcoin to be decentralized and also private at the same time. Satoshi mentioned that the mathematics for making it truly hidden is not entirely there, but the technology is here today, and you have coins like Zcash. And in fact, this past cycle wasn't very exciting for altcoins, but one narrative that took the forefront and did very well was the privacy narrative, and coins like Monero, Zcash did well. Now, should Bitcoin evolve and adjust to have that hidden layer, or should it stay how it was made day one?
I think one of the most important pieces is that Bitcoin remains fully auditable. So you can see all of the transactions and be able to go through the Bitcoin supply and know that there's not more than 21 million. Like, that's
Yeah.
one of the most important features of Bitcoin. But you can layer on privacy on top on the second layer. And that's what we're doing with the Lightning Network, so that transactions on Lightning are private between two parties. So you and I can transact, and all that the network needs to know, the rest of the world, is that you and I may be connected by a chain of channels.
Got it. Really interesting. And one more question, slightly off topic, but I just want to pick your brain. Another issue that's not just to Bitcoin, it's to all of cryptocurrency. We're coming to a world of quantum supremacy, meaning quantum computers are not just going to be able to do trivial calculations. They're actually going to be able to pose a threat to some of our fundamental encryptions that we have today. And one of them is SHA-256, which is the backbone of Bitcoin's encryption. People seem to make this a really big deal. I don't think it is, but I want to get your opinion on it. How will this problem get solved, and how will we cross that bridge when we get to it?
If you want to get funding for your quantum mechanics project or quantum computing project, find a really big target like Bitcoin and launch all of your concerns about quantum computing at it because it will get attention. And I think that's what we're seeing right now. There's a lot of momentum happening for quantum computing, but the reality is that Bitcoin is highly resistant to quantum computing, and the pace of quantum computing is actually slower than a lot of people realize. We have
Mm,
time, but that doesn't mean that we can ignore the problem completely. SHA-256 is extremely resilient to this, but the ECDSA, the elliptic curve digital signature algorithm, is more prone to quantum computing attacks. And so that's where most of the research funding needs to go to make Bitcoin quantum resistant.
yeah, there already is quantum encryptions that are more or less quantum proof, and I think SHA-256 specifically is not under direct threat. It's like a logarithmic threat, so it's a little more vulnerable, but it still has a security foundation. You just need to increase the amount of encryption bits, and you're likely safe. It's more about implementation and getting it in the system. And I completely agree with you. It does seem like to some extent there's a bit of a marketing angle, yet it's still something that needs to be considered.
You're
Okay.
completely right. SHA-256 is what protects the nuclear codes. So if there is a quantum computing risk, we have way bigger problems in our hands than Bitcoin.
Yeah, and one of the most concerning topics around quantum computing is this idea that even if we do upgrade all our encryptions to be quantum safe, you have this real concern of harvest now, decrypt later, where all this encrypted stuff that goes to the internet that you and I are truly not concerned about. Like when we log into our bank, there could be someone in the middle sniffing and stealing those packets, and you and I are just not concerned because those packets are junk to someone who doesn't have the decryption key. That's no longer going to be the case. And you have adversarial countries that are collecting troves of data that is complete junk. But when quantum computers become accessible and the technology gets there, there's going to be a lot of cracking old data, which even though it can't directly be used to break current encryptions, it's still going to give them a lot more information that that would normally be assumed as sensitive. So it's all a very interesting direction where this is all heading, and it's just so much to handle. You have artificial intelligence moving at light speed. You have blockchain, which is greatly going to facilitate how data is stored efficient, it's decentralized, and you have quantum computing. So think of these three things working together. The future is just absolutely wild.
Following college, I worked in a call center, and that call center got contracted to provide identity theft services after major security breaches. That call center handled Target's massive security breach, where 2 years of customer data was exposed because Target hired an HVAC contractor with a weak security system, and the attackers hacked into the Target security system and exposed every person that shopped at Target within a 2-year period. That includes credit card numbers, their names, their addresses, everything. And the only compensation that could be offered was credit monitoring services. The thing is, in the Bitcoin world, information has real value. 12 to 24 words are the thing that secure all of the value that you've accumulated. And it's the most prescient example of information has value. So protect your data.
And it's paramount. Like we always knew security is super important. This is not the conversation anymore. Security is uncompromisable because when you deal with the decentralized structures, you have nowhere to go as a fallback. Once you get those seed phrases, there's no plan B. You either do it right or you don't do it at all, kind of thing. I would love to know more about Amboss technology. So, first of all, where did the journey start? Where were you like, hey, this is something I need to pursue?
Yeah. Well, I got so excited about Bitcoin because it gave me control over my financial future again. One of the cases that a call center handled was where the bank reorganized debit card transactions to maximize the overdraft fees that they could charge. So it was very adversarial against the customers. But
Yeah.
Bitcoin was the complete opposite of that, where the users of Bitcoin had control again over their financial future, about the policies that their savings were operating under. And that was incredibly powerful. But then I tried to use Bitcoin to do a payment, and it was one of the most expensive things that I've ever done. It took too long, and it cost me about $60 per transaction. Whereas the Lightning Network was the future of how Bitcoin could evolve into being faster, cheaper, more global, where you could have a better user experience when using a better currency. And so I really dedicated myself to trying to use the Lightning Network as a hobbyist and then starting Amboss to really take it to the next level.
Amazing. Tell me a little bit more about the Lightning Network because a lot of people know about Bitcoin, but when you talk about like layer twos and stuff, it can get a little esoteric. So walk me through the process here.
So generally, when you make a transaction on Bitcoin, it's I'm putting Bitcoin into a transaction and I'm transferring it all to you. But instead, when you're doing the Lightning Network, I'm going to use a Bitcoin transaction to create financial infrastructure. I'm going to build a pipe
Mhm.
for money to flow back and forth between us. And that transaction can last for years upon years, and we can do millions of transactions. And only when we're done with the relationship, we can decide to part ways and create another Bitcoin transaction that closes things out and pays us our respective Bitcoin amounts.
Very interesting. So Lightning Network just hit all-time highs in terms of capacity. What does that mean for the health and performance of the network?
Yeah, Bitcoin capacity is one of the few public metrics that you can get out of Lightning Network because most of the transactions are private, but you can see the size of the infrastructure. And what we can see right now is that there's over 5,000 Bitcoin that is locked in Lightning channels. And all of that infrastructure can cycle many times per month. Right now, what we're seeing, our estimates are putting the cycling of all of the Bitcoin within the Lightning Network, it's cycling twice per month. So our estimates put the transactional volume of the Lightning Network at over $10 billion over the past year. So it's an incredibly capital efficient system for settling payments. And a lot of people try to compare it to total value locked in some of these other layer twos, but it's a wrong metric to do that
Mm.
because we have cycling value that's happening. So that would put the velocity of the Lightning Network at 24.
So that's amazing. I know you guys made an announcement about RailX. Can you tell me what that is?
Yeah. In the new future for the Lightning Network, we're introducing more tokens and assets into the Lightning Network. So that means stablecoins are coming. So by introducing these stablecoins into our Rails system, well, we're creating infrastructure so that end receivers can receive stablecoins, which are doing $20 trillion worth of payments in just the past year. So tapping into that market is huge for Bitcoin. Rails X is a peer-to-peer decentralized way to trade with your peers and move between Bitcoin and stablecoins or other assets natively on the Lightning Network. And so it operates without really any on chain activity, but you're still moving value around and being able to tap into arbitrage that's possible when there's shortages of stablecoins or accumulations within the Lightning Network.
I know this sounds like such a weird statement, but it sounds like Bitcoin is late to the show. Where Bitcoin originally came out and it inspired everyone, and then you kind of seen all these engineering pursuits and problem solvers spawn off different coins. And now Bitcoin's coming to the show saying, hey, no, me too. I can do transactions really quickly too. What do you think Satoshi had in mind when he first wrote that white paper? Did he intend Bitcoin to be used as you're trying to use it, or did he intend to use it as it was originally used for? Which I guess at the time was all speculative, but it seemed more of like just a way to store value.
I think Satoshi really showed himself to be a researcher. I mean, he was a builder, an engineer of sorts, and combining different research pieces in order to make a system that works. But he seemed to be open to all sorts of different innovation. That includes stamping things into the Bitcoin blockchain or creating new tokens based off of Bitcoin. I mean, really, this is a technology, and technology cuts both ways. Satoshi was not a maximalist as we know them today, and I think this is, innovation for humanity.
Good answer. So why do you think it took so long for something like a Lightning Network to come to fruition?
Well, Lightning Network is 8 years old at this point, and it has been building. It's gone through quite a few trials and tribulations with ordinals or different activity that's happened on Bitcoin's base layer, and it has uh, continued to evolve because of that. I like the term anti-fragile, where it's being tested all of the time. This is a payment system that is moving incredible amounts of money and is being tested live in production. But it works. When you go down to Bitcoin Beach in El Salvador, like you can use Lightning there as much as you want.
Hmm.
In I use Lightning on a nearly daily basis.
Yeah, that's it. It's where it's all heading. The amount of money being printed, it's just so inflationary. It's just something as Bitcoin that's uniquely deflationary. And increased demand, limited supply. At the end, by 2140, I think, is when there's
That's
going to
right.
be a total of 21 million coins. We're like 95% there. And then we're going to just keep chopping that incrementally over the 4 years. What are some current bottlenecks you guys are experiencing? And what kind of growth do you guys see when you can kind of surpass them?
Well, in July, we launched a product called Rails, which is a yield service. So you could put Bitcoin into self custody on a Lightning node, and we'll help allocate that Bitcoin and create infrastructure and get you paid for it. And
Hmm.
every payment that goes through, I mean, just today, I had about 60 transactions go through my Lightning node, and each of those paid me a couple of Satoshis. So this is true. Like we're disrupting Visa and MasterCard by making a payment system, but it is still kind of a yield service, but it is
Right.
self custody. We built it the right way. And instead of bottlenecks, we're actually seeing lawmakers move towards the Clarity Act, which would be really
Yeah.
helpful for us because this is not a passive yield issue, which was the major sticking point in that legislation. This is active yields. So this is fee capture, is yield derived from payments, payment infrastructure. And overall, I think things are moving in the right direction to get legislation that is more protective of self custody builders.
Can you explain the difference between active and passive yielding? With staking, there are some risks involved in the process. You're giving your funds to someone else and they're leveraging them. And that always comes with some risks. So, what kind of risks are involved and how is it different than typical staking structures?
Yeah. We built Rails really after BlockFi and Celsius completely blew up as uh, the poster child of yield services. But what BlockFi and Celsius were based off of was lending and rehypothecation.
Hmm.
It turns out that those businesses were insolvent. They didn't have the assets backing them. But what we built with Rails was complete self custody. So that is fundamentally different, where there's no lending and no rehypothecation. So really, it means that you're keeping your money and you can withdraw at any time. And really, no one else is holding your money for you. So removing custody from this equation really helped things.
You've been at Amboss for 8 years. What's something you learned throughout your time there?
Let's see. Starting the company, I had never it had never even crossed my mind that I could start a company, that you could actually build a business. It is a wild journey. There is no other person to do it better than you. Um, I think there was a lot of imposter syndrome, but one of my investors reminded me that you don't have the luxury of having imposter syndrome. You have to go and do it. It's a very high agency task that you're given yourself. It is true insanity to start a business. And out of this, I could not have more respect for founders that take a major sacrifice of the prime of their lives to build an incredible business and change the future.
Jesse, I have a question for you. As an investor, it's a volatile environment. Let's just talk about today, the elephant in the room. We just went from the 100-week SMA to literally touching the 200-week SMA in the span of like 3 days. And it is crazy out there. There's brawling narratives of super cycles and 4 year cycles and brutal bear markets. And we top on apathy and everyone's surprised. Where's alt season? It's an extremely stressful environment. When everyone's telling you to buy and your mom is telling you, I heard it on the news, should I buy some? That's when you want to sell your coins. When everyone is saying there's blood on the streets, it's dead, it's garbage. This is where you build that opportunity where you look back and you say, I bought Bitcoin at $60,000 and now it's like 250K. And you're like, man, if only I had taken it seriously. But when the actual time comes, you're like, I don't want this. This is crazy. I wonder if any of that like volatility and stress and drama trickles into your lifestyle as someone who's like involved in it, or are you completely separated from the financials? Like you don't care if we're in a bear market or a bull market.
I love this question because it really exposes that at no price does Bitcoin stop operating. It
Yeah.
worked below $1 per coin, and it will continue to work above $1 million per coin. The technology is the same, the math still maths, and you can continue to operate with this robust protocol. And we're really using it for money, for the transfer of money. Like there's no, the price really doesn't factor in.
No.
It really only matters how much Bitcoin is required to move value. And it's still just a money protocol.
Let me ask you a philosophical question here. If you were to take a time machine 10 years into the future, what do you see Bitcoin becoming and how do you see people using it?
As you said it a couple of times, Bitcoin is an immutable record. It's the most honest form of history that we have that is kind of a capitalist story. If you pay the fee, you are entered into the ledger that will exist for many, many years and decades, maybe eons to come. This is the immutable record. This is the history of the victors, and here we are.
Despite you building on the Bitcoin network, are you a Bitcoin maximalist?
I'm a Bitcoin mostimalist. So Bitcoin is my favorite money, but I understand that there's needs for other types of currencies and tokens. And, a lot of people, especially merchants, they don't like Bitcoin's volatility. It's the most scary thing to them because they have fiat expenses denominated in their local
Right.
currency.
But if it
And
was predictable, it wouldn't be what it is. Everyone would jump on it. The opportunity lies in the fact that it's so unpredictable.
as an investor, in Bitcoin, I love the volatility.
Yeah.
As a technologist, I love that Bitcoin continues to operate and I can build on top of it.
So you said you're a Bitcoin maximalist, if I'm quoting you correctly. What other cryptocurrencies do you see playing a vital role to help work as a cohesive system for digital assets?
I think some of the most important innovations are happening on the stablecoin side. I
Mm,
just came back from the Plan B conference where Tether was present. They're having a tremendous impact by delivering dollar stability to the rest of the world that really does need it right now. Um, it's funny to hear Paolo speak about Tether because he's like, I love Bitcoin, but I created this very dumb thing which is a stable coin. And it's very simple and it made me incredibly wealthy and I'm so thankful for it. But I love Bitcoin. I want the decentralization. It's hard to get the signal through the noise, but
yes.
Bitcoin is here to stay. We're building for the long term. And, we don't have all this token mania, all this wild speculation, massive leverage, but overall, it just works.
And every time you underestimate Bitcoin, it will come around to remind you that it's still king. Because people are looking for those meme coins, those altcoins that are going to pump 500%. It never happened. But one thing that seems to be predictable and guaranteed is that you have an element of stability and reliability. As volatile as Bitcoin is, it is going to the right and up. And that's something that we're all confident with, right? Every other coin, you have this like, yeah, but there's this coin that does it better. That sort of argument doesn't exist with Bitcoin. For whatever reason, it is the first one, it is the OG, and even if it's not the fastest on the network, there's something about it that we all agree is intrinsically valuable in this space.
I just saw a chart of gold prices during the Weimar Republic, the Weimar hyperinflation, and the gold prices were skyrocketing upwards and crashing downwards. And you saw massive percentage changes. And Bitcoin is going through the exact same thing as we're
Yeah,
seeing uh, deglobalization, the fall of the dollar long term. I think we're at the end of this cycle. And it's really going to be a wild ride, so strap in.
it is. For those who think it's too late, here's a little bit of perspective. when gold had its run 2 months ago and it hit new all-time highs, and then it had a correction of over a few days, the amount that was corrected was around $2 trillion. The amount that gold corrected was greater than the entire market cap of Bitcoin. So for those who think it's too late, that is the argument you will always make. If you weren't able to invest then when it was speculative and it was a bunch of nerds who were putting their life savings and net worth into something that was going up 20x and going down 90%. You always say, if only I invested then, you wouldn't have invested then. And that's the argument you'll make in 5 years from now. That's the argument you'll make in 10 years from now. So yes, I completely agree. And I think Bitcoin is definitely a good place to build a foundation and a service on top of.
Thank you. Volatility is vitality. And we
I like
have
that.
one of the best measuring sticks of value in the world, which is Bitcoin. And we're getting some crazy signals coming from the rest of the financial markets. We're over leveraged. We're like on the brink of war. It's a wild time, and Bitcoin's price is a reflection of that.
Yeah. Just one last question here. I don't want to pick on a specific company, but I want to get your perspective on like treasuries that yield Bitcoin as opposed to obviously spot and the underlying asset. If someone is an investor and they want to get started, obviously getting actual Bitcoin is the way to go. But what's your perspective on treasuries?
I think there's some incredible opportunities there. If you can build a business with great cash flows and accumulate more Bitcoin than someone that is just buying it with their wage, and be able to very smartly tap the inefficiencies of capital markets, then I think you've got a valuable investment opportunity. Of
Mm,
course, you are sacrificing a lot of the control that Bitcoin itself gives you. That,
yeah.
it's very resistant to change, whereas a Bitcoin treasury company is more resistant to change. You've got stockholders, you've got representatives of the board. You can have things change pretty quickly at a Bitcoin treasury company, but Bitcoin remains constant.
Yeah. Jesse, how can people get in touch with you?
Feel free to follow me on Twitter, Jestifer_BTC on X, or Amboss Tech.
Thank you for your time, Jesse. It was an honest pleasure.
It was a pleasure. Thanks so much, Michael.